Every trader dreams of finding that one perfect breakout the moment a stock surges out of its range, leaving everyone else wondering how they missed it. But here's the truth most don't understand. Finding breakouts isn't about prediction, it's about preparation, patience, and proof. The proof lies in the backtest, the only mirror that reflects how your idea might have survived the unforgiving tides of the market. In my years watching the ticker, I learned that markets don't reward opinions, they reward observation. The man who studies the tape without bias will always outperform the man who trades from excitement or fear. A breakout is not a random explosion in price, it's a carefully constructed event that's been brewing quietly under the surface. You can't chase it. You have to earn it through disciplined observation and testing. Backtesting is the trader's rehearsal. It's how you separate luck from logic. When you backtest properly, you aren't guessing, you're proving. You're seeing how a strategy behaves under pressure, across different market conditions, and through times of madness and euphoria. And the lesson that always emerges is simple. Only the strongest patterns, backed by consistent logic, survive the test of time. You see, the problem with most traders today is not that they don't have access to information, it's that they have too much of it, and they never take the time to verify what actually works. They'll hear someone talk about breakouts, see a chart that looks promising, and they jump in with real money. But markets don't forgive laziness. A single mistake made without testing can erase weeks or months of hard-earned capital. When I traded, I didn't have fancy backtesting software. My testing was done through notebooks, ticker tapes, and long evenings of studying price action. I learned the rhythm of accumulation and distribution by watching how volume moved before a breakout. The operators, the big hands, always left a footprint before price exploded. They'd quietly build positions, holding the stock in a tight range, shaking out the weak hands before the true move began. You can still see the same behavior today. The tools have changed, but the psychology hasn't. Human nature remains the same. Greed, fear, impatience, hope. That's what you're really backtesting. Not just your strategy, but your ability to understand and survive human behavior. When you backtest a breakout system, don't just look at how much money it makes. Look at how often it fails. Study how deep the pullbacks are before it breaks out. Note the volume behavior before and after the move. Ask yourself, did this breakout occur in a trending market or a choppy one? Was the stock supported by strong fundamentals or just speculative frenzy? The trader who learns to ask these questions gains an edge that no software can replicate, because backtesting is not about perfection, it's about awareness. It trains your eyes to see patterns that others miss. And more importantly, it builds faith in your method. When you've seen a setup work hundreds of times in historical data, you develop the courage to act when the same setup appears live. That's the real value of backtesting conviction built from proof, not emotion. Now, let's talk about the anatomy of a breakout, what it truly looks like. Every genuine breakout is born from consolidation. Price moves sideways for days, weeks, sometimes months. Traders lose interest. Volume dries up. But beneath that dull surface, professionals are accumulating. They're testing the market, shaking it, gauging the public's reaction. Then, suddenly, the pressure becomes too great. Price bursts through resistance, and volume floods in. But here's the catch. Not every surge through resistance is a real breakout. Many are false traps designed to lure the impatient. The only way to know the difference is to study hundreds of past examples through your backtest. See how true breakouts behave compared to false ones. True breakouts tend to hold above their breakout level even after minor pullbacks. False ones collapse quickly because they were driven by emotion, not genuine demand. Backtesting teaches you this difference without the cost of real money. Every failed test, every whipsaw on historical data saves you from a real loss in the future. You'll notice something fascinating. As you test, the best breakouts often follow a specific rhythm. First comes quietness. Price compresses in a tight range. Then comes a small shakeout, a dip below support that scares off weak holders. Then, the breakout, often accompanied by a sudden spike in volume. This pattern repeats across decades, in all markets, because human nature doesn't change. In my trading days, I used to say that the market is never wrong, only opinions are. Backtesting is how you silence those opinions. You might believe a pattern works, but the backtest tells you the truth. Sometimes it humbles you, sometimes it validates you, but it always educates you. Now let's bring this into practical steps. If you want to find breakouts using backtesting, start by defining exactly what a breakout means to you. Is it a close above a recent high? Is it a surge above resistance with increased volume? Write down your definition in precise terms. Then gather your historical price data that goes back several years, ideally across different market cycles. Apply your rule and see what happens. Note how many times your signal appears and how price behaves afterward. Do this for multiple time frames, daily, weekly, even intraday if you wish. Don't just record profits or losses, record behavior. How long does it take for the move to continue? Does it retest the breakout zone before going higher? What percentage of breakouts fail immediately? Once you've collected enough data, you'll start to see patterns within patterns. You might notice that breakouts work better in bull markets than bear markets, or that volume confirmation increases success rates by 20%. This is gold, not because it guarantees success, but because it gives you clarity. After testing comes refinement. Eliminate what doesn't work. Keep what does. Tighten your rules until you've removed as much noise as possible. A good breakout system is simple, clean, and repeatable. Complexity doesn't add profits, it adds confusion. One of the greatest lessons I learned in my career is that a trader's biggest danger is overconfidence. Backtesting can make you feel invincible if your system performs well. But remember, the past is not the future. Backtesting shows you tendencies, not certainties. The market is a living thing. It changes shape, adapts, evolves. Your job is to use backtesting as a compass, not a prophecy. Discipline is what bridges the gap between a tested idea and a profitable reality. I've watched traders ruin brilliant systems because they couldn't follow their own rules. When the heat of the market rises, emotion takes over, and all that testing goes out the window. You must train yourself to trust your plan as much as a soldier trusts his weapon. You built it, tested it, and proved it. Now, when the signal appears, execute. No hesitation, no second guessing. Every great trader eventually learns that the real battle isn't on the chart, it's within. Your system can be flawless, but if you can't control your emotions, it won't save you. Backtesting helps here too because it gives you evidence. It replaces fear with logic. When you've seen your edge work hundreds of times in data, you no longer tremble when a trade goes slightly against you. You know what to expect. You know the probabilities. You know yourself. Let me tell you something from experience. Fortunes are made by waiting for the right setup and having the courage to act when it appears. The average trader does the opposite. They act too soon and hesitate when it truly matters. Backtesting disciplines your eyes and your instincts to do the opposite, to wait until the odds are truly in your favor. And that's what finding breakouts is all about, timing and confirmation. The market doesn't hide opportunities. It tests your readiness to see them. If you backtest 1,000 charts, you'll begin to feel something powerful: intuition built on evidence. You'll recognize when a stock is coiling up, when the pressure is mounting, when the smart money is positioning quietly before the crowd catches on. You won't need anyone to tell you it's time. You'll just know. That's when you've truly mastered the art of breakouts. There's another truth you must accept. Most breakouts fail. It's the few that succeed which make your fortune. And if you've done your backtesting properly, those few will more than cover the cost of the failures. That's why risk management is non-negotiable. Never risk more than you can afford to lose on a single trade. Backtesting will show you drawdowns and losing streaks. Don't ignore them. They are warnings from history. Trade small. Trade often. Trade consistently. Let your edge compound. That's how fortunes are built, not from one lucky trade, but from 1,000 disciplined ones. In every market cycle, there are moments when the crowd panics and moments when it rejoices. Your job is to stay the same through both. Backtesting conditions you to see the bigger picture. It shows you that no loss is final and no gain is forever. What matters is survival, the ability to stay in the game long enough to be present for the next great opportunity. There's a quiet satisfaction in seeing your work come to life, a breakout that you anticipated not from rumor or guesswork, but from tested experience. That's the mark of a true operator. You're no longer reacting to the market, you're flowing with it. The beauty of backtesting is that it builds not just skill, but character. It rewards patience, humility, and persistence. It punishes arrogance and impulsiveness. It's a mirror that reflects who you are as a trader, not who you pretend to be. If you want to find breakouts that actually work, you must become a student of the market's history. Study the great moves of the past, how they formed, how they broke out, and how they continued. Recreate those conditions in your tests. Learn from the rhythm of price and volume. Let the data teach you what the market has already proven countless times. That success belongs to those who observe without emotion, act without hesitation, and adapt without pride. So, when you sit down to design your breakout strategy, don't look for shortcuts. Backtest it, refine it, and retest it. Build it on a foundation of logic and simplicity. Let every result, good or bad, sharpen your understanding. Then, when the next opportunity presents itself on the live market, you'll know it, not because someone told you, but because you've already seen it happen 100 times before. That's how great traders are made, through discipline, through study, through relentless testing of truth against illusion. A breakout isn't luck, it's the reward for preparation meeting opportunity. And backtesting is how you prepare for that moment long before it happens. The markets will always test your nerve. Prices will tempt you, the crowd will sway you, and your mind will betray you. But if you've done your work, if you've seen the pattern proven time and again, you will stand firm while others panic. That's how you survive. That's how you win. Because in the end, every fortune ever made in the market started the same way, with a single tested idea executed with conviction. And every ruin began the same way, with an untested impulse executed with emotion. The choice between the two will always be yours.